Hey, good morning, everyone. Marty Missouri here. Wednesday, October 9th, 2019. Pre-market update, very pre-market, or barely pre-market, I should say, just 3 minutes before the open. Want to talk a little bit about the news that we talked about yesterday, update you on that, take just a quick look at the chart, and get done with you early, at least on the video commentary this morning. Yesterday, we looked at a pretty good down day, all about the trade war. I talked about the fact that the US was kind of going hard at China, strangely, the week that the negotiators are coming to Washington to try to do a trade deal. I mentioned that China has made very clear that their proposal is going to be very narrow, frankly, relative to what the U.S. hopes to accomplish. And it was looking to me like the U.S. was really just trying to get them not to come, really egging them on to, or daring them not to come. The president lately has said it's a 100% deal or no deal. Well, futures are rallying pretty noticeably this morning. They began real early this morning on news that China's going to come and they're going to try to strike a limited deal. Specifically, the agreement that they'll buy $10 billion of additional U.S. ag products, which really isn't a lot in the big scheme of things, trust me. And they want the U.S. not to implement the pending new tariffs. And I think I said this yesterday. I know I've been saying this to clients. Anything that has a deal in it is going to be really bullish, at least for a short period of time for the stock market. Even something like that, which is a limited deal that does nothing more than eliminate proposed hikes in tariffs. Months and months ago, when we thought we were getting close, I was reiterating here my opinion that any deal that doesn't get rid of the tariffs that were applied to that point, and there have been more since then, doesn't do the trick in terms of helping out the big picture, and that would be the macro or the underlying global economy and the damage that is continuing to be done on the ground with existing tariffs. Now, the pending new tariffs create damage just from uncertainty. I promise you, folks, the fact that the numbers have been bad in the manufacturing sector and in the import space, things like that, amid a situation where we have pending new tariffs, doesn't bode well in the aftermath, meaning, make no mistake, there has been a lot of pull forward. In fact, there was an unusual spike in our truck tonnage chart. I think it was in August, and that was all about, or virtually all about, getting in front of the tariffs, I can virtually assure you. So there could be some, aftermath letdown when we get through this. So this really is not a good development, but the market likes it right now. Like I said, now we'll see, because any minute this could be doused with cold water, because I'll say it again, just within the last few days, the president has said 100% deal or no deal. So this is going to have to be a backtracking if we do have a limited deal. But it looks like maybe they're going to let them come to town Thursday and Friday and see how it plays out. I remember yesterday my parting comment was look for a lot of volatility in both directions, and that's what we're getting. So stay tuned. There's more to come. We'll begin talking about Brexit. I've been following that story and really haven't been mentioning it on the blog of late. Very fluid, not looking so great at the moment, and we're going to have to start talking about that again soon, very soon, in fact. Okay, so yesterday on the 15-minute chart, I pointed to this flag pattern, and I said this is a bearish flag pattern. Turn that upside down, and let me grab my drawing tool here. A bullish flag pattern, would look, something like this, and this really looks more like a pennant. But so that would be a bullish pattern. This would be a bearish pattern, and they are continuation patterns. And like I said, you tend to move the distance of the flag pole. So you can see here we have our flag developing right there. And if you take this down, Look at that. So it's about the same distance, a little give or take, of the flagpole on the way down. This is where the market bottom. Now we came down right to there. Well, actually, came down to here, tested right there, kind of the top of the flag, and then came down and hit what would have been the target. So if a trader technician were trading the flagpole, they'd have gone short on the breakout, and they would have covered right in here on this bounce off of that. So we came back, tested it, and and found support pretty much right at the bottom, right where you're supposed to. It's interesting how the technicals work out. Now we've come back up again, and we're still kind of there. So now we have a new short-term level of resistance on the 15-minute chart, and we have, I'm sorry, support, and we have resistance right there where we failed before. So notice with this big burst on the China limited deal news, we came up, tested where we failed yesterday, and we're coming off of that right now this morning in the futures market. And then finishing up with the daily chart, folks, remember we identified this upward trend line right here. We have our resistance right here. Again, this is the S&P futures. Came down, developed this range in here, closed above this, again, August resistance, got a couple, maybe a zone in here, and then failed right there yesterday, closed. You might as well call it right on that trend line. We got that bounce this morning on the China news, and as you can see, we're still finding support. This is your ascending triangle. This is actually technically a bullish pattern. You would, with it's ascending, you've got your resistance here. You ultimately expect to come out and burst out to the upside. So you've got longs ready to buy that breakout. You've got stop losses down here below. You may have some shorts here to cover. So the breakout would bring in some short covering, and you could see the market thrust higher. I could still say my base case for marginal new highs is there. You can see we're within a stone's throw. A limited trade deal might be enough to do it. So wait and see. As I keep saying, look for a lot of volatility in both directions. We're obviously getting that as I speak here today. With the rhetoric out of Washington of late, the 2 or 3 direct arrows at China this week when they're coming for trade negotiations, the recent commentary from the U.S. that we'll only do a 100% deal. I don't know. I know they like the market going up, so maybe they'll backtrack on that and say, okay, we'll do a limited deal and it'll be good for farmers. Or they stick to this no deal if it's not a 100%. And then in that scenario, the administration is taking the risk of a market meltdown and is going to turn that politically in its favor. That'll be the goal. China won't work with us. The Democrats, the uncertainty over the impeachment noise, the Fed, and so on. So, a lot of this, of course, is political tactics. You have to agree. We're in the campaign season, so it's unavoidable. And this U.S.-China trade deal is huge. And remember, I believe it's October 18th next week. We've got tariffs coming on European imports. We'll see how Europe responds to that. And then we've got these pending tariffs on a whole bunch of Chinese goods that are going to get ramped up here very soon. If there's no limited trade deal that eliminates those, which would be very bullish short-term for the market. That by itself, in no way, shape, or form, would change our thesis right now, which is, frankly, bearish. And that's based on the data, and that's based on the technicals and everything we're seeing. So until that changes, we're going to be guarded. That's the bottom line. I'll leave it there. Thank you, as always, for watching and listening. Talk to you again very soon. Bye-bye.